What percentage of someone's pension earnings goes to medical needs?
The average pension that is being paid in the country now is actually less than 30,000 per month. And what we found is that
30,000 per month is the same amount you're supposed to use for everything else, medical.
For transport, for medical, for all those
That's
needs.
quite low.
Exactly. It's actually quite low. So what has been found is that a lot of retirees, the amount they need a month for medical care is in the region of or above 20,000.
Welcome to Zamara Podcast, your gateway to financial literacy and well-being.
Welcome to the Zamara Podcast, ladies and gentlemen. Another session where we'll be talking about post-retirement medical fund. I'm your host, Kenneth Wendo from Zamara Consulting and Advisory Department. With me today, I'm joined by Linus Mahulo and Laura Lwala. I'll start with you, Laura. Just tell us where you're from, what you do, and how you would want us to proceed in terms of this conversation. And one thought about post-retirement medical fund.
Thank you so much. My name is Laura Lwala from Jubilee Insurance. I do business development at Jubilee. And I'm excited that we're in a space where post-retirement medical funds are really taking an uptick in the country. And it's something that will be a game changer for retirees in the future.
Thank you. Linus, introduction, please.
Yeah, thank you very much. My name is Linus Mahulo. I'm the manager to Zamara for post-retirement medical schemes. I'm the one who's in charge of advising our clients in terms of what they need to do to set up post-retirement medical funds. And I'm glad to be here to expound on matters pertaining to post-retirement medical schemes. Thank you.
Thank you, Linus. So we'll just get right into it. And I would start with you, Linus. The need for post-retirement medical fund. We've read literature that the Retirement Benefits Authority did some research and realized that it was imperative for a way pension schemes would help in alleviating this pain of out-of-pocket payment of bills. Would you want to expound on this? What the need was, one, two, to what extent then can this thing alleviate, or by this thing I mean post-retirement medical funds, can they alleviate the pains of out-of-pocket medical bills in old age?
Okay. So I think the study by the Retirement Benefits Authority was in two stages. The first stage that they did was to look at the adequacy of the pension payments that retirees are getting. And what they found out is that retirees, when they get to retire, basically from active employment, they receive pension payments that are low compared to what they were earning when they were in service. So then the next thing that they did is they found out from that amount that they're earning, how do they spend it? Or what do they spend that money on? And of course, top of that list were things like food, shelter. But then the thing that stood out the most was medical costs. And that study went on to further see that the amount that the people are receiving in general is actually not sufficient to cover their medical costs. Because one of the things you need to appreciate is that when someone retires or when someone is of advanced age, certain conditions start
setting in
at that age. And those conditions in many cases require either constant medication, regular visits to the doctor. And so those conditions become what I would call a burden to the retirees. So that's where the need came from, the adequacy of the pension payments and also the onset of some of these conditions that the members in retirement face at that time.
Right.
Yeah.
Laura, if I may ask you, you have been in the pension space for a while, now in business development. Some time back, there was a general thought that pension spaces or pension schemes are being used to deal with the pain points of the society that ideally should have been dealt by government. You are aware of now post-retirement medical fund. At some point, we have had a housing issue. The bill that was rescinded, by the court. Do you feel this is it? And do you think, as a country, we are at a stage where we have saved enough to allow other things like post-retirement medical funds into the schemes, or even using part of your savings to purchase medical cover in retirement?
Yeah, thank you for that. What my view is so far with the housing, one of the reasons it wasn't able to take off the way it could be because the regulation around it was not foolproof. As you are aware, we had so many issues with especially with the taxation of it. But for the post-retirement medical fund, it will come in to cover a need that is touching almost every single individual
Okay.
who will retire.
Yes.
Yeah. So it's something that people will take it more seriously because every single person is prone to old age diseases.
Yeah.
Wear and tear is going to happen to everybody at some point.
Indeed.
And can find that most of the people who retire, the pension that they get, what do they use it for? Medication. They try to cover that. So I do think we're in a place where people are more aware, more realistic, and even for the saving they've come to see the bigger need that will need a bigger chunk of money is medical needs.
Yeah.
So preparing for that is a matter of a necessity.
We cannot run away from
We cannot
that.
run away from it, for that understanding.
And
Yeah.
what, I don't know, data, statistics, Linus to you, and you can comment as well, Laura. What percentage of someone's pension earnings goes to medical needs?
Okay. So that study, I would say, is a bit skewed. By that I mean, you find in Kenya a lot of the pensions or the pension systems that we have actually do provide people with a low amount of pension. So you find the average pension that is being paid in the country now is actually less than 30,000 per month. And what we found is that
30,000 per month is the
Yes,
same
is the
amount
average.
you're supposed to use for everything
foods,
else,
for
medical.
transport, for medical, for all those
That's
needs.
quite low.
Exactly, it's quite low. So actually, what has been found is that a lot of retirees, the amount they need per month for medical care is in the region of or above 20,000, I would say.
Wait.
So if you did as a percentage of pay, you'll find somebody spending up to 2/3 of their
Linus,
money.
you're telling me, assuming it is 30,000, assuming someone is getting 30,000 per month, that means they have saved a lump sum of about 3 million, which they have used to get a pension.
Correct.
It means 20,000 of that 30,000 is going towards
Yes.
medical. That's a
That's
lot.
what it means. But what we found, the individuals themselves, they don't use their pension for that. So meaning they have to get it from other sources. So in many cases, they depend on their children
Okay.
for support.
Okay.
So
Okay.
it's actually supplemented by other things rather than they depend on their pension, because clearly from their pension, it's not sustainable. They'll not be able to pay the 20,000, say,
Yeah.
and do all the other things, the other necessities of life.
Yeah.
So it actually has to be supplemented. And actually, that's where the problem comes in, that for those that don't have that sort of support system, if you don't have children, let's say, that can give you that money, then you end up not getting the medical care that you need. So that's where the problem comes in.
But-
Maybe
yes,
maybe
Laura.
just to chime in before we move on, I think when by the time most people retire, averagely it's around the age of 60.
Yeah.
When you look at health insurance for the age of 60, and this is something I've run into a lot lately, is that you'll get a cover for a year for somebody who's above 60 is around 200,000 plus, depending on whatever
This is per
conditions.
annum.
Per annum.
Correct. Yes.
Yeah. So that, you can say what Linus was saying about 20,000 per month. You could find that 20,000 someone is saving towards maybe a premium.
Yeah.
Because when it comes to actual paying medical bills without you having, let's say, any cover, you're just paying cash.
Yes.
It'll be way more. It'll be way more
Out
than
of pocket
20.
payment
Yeah,
is
out of
very, very
pocket
expensive.
payment,
I would
Correct.
assume.
Yeah.
I would see, actually not assume. The three of us probably have older people in our families. We have seen what they are going through in terms of medical needs, expenses. I think Boniface Mwangi has tweeted once and said that every Kenyan is one disease away from poverty and how expensive it is. But then just circling back, Linus, to the importance of these post-retirement medical funds. Speaking to our viewers and listeners today, in your view, the gravity of importance of this, because everybody is going to be get old.
True.
Yeah.
How important are post-retirement medical funds? And maybe you can comment on the possibility, because now they are embedded in pension schemes, typically.
Yes, correct.
The two of you can comment on the possibility of whether it is an evolution of regulation or is it possible for people to set up private post-retirement medical funds such that people can actually save separately from the pension scheme towards medical needs in retirement?
Okay.
Linus?
So, yes, it is possible now for people to save privately towards their medical needs in retirement. It is something that even the retirement benefits regulations also allow for. They've actually allowed, whether it's individual pension funds, umbrella funds, and so on, to set up those savings mechanisms.
Yeah.
So yes, it's something that can be embraced, and also that will also allow the people in the informal sector also start saving, because based on statistics, majority of Kenyans are actually employed in the informal sector.
Yeah.
I don't know the exact percentages, but definitely more than 60 or so percent are actually involved in that sector. So that is one crucial sector that cannot be left out, and that can be covered by having these individual funds where they can save their monies. Their monies too, yeah.
Okay. It would be a good thing. I am not so sure, but it can pick up. Again, you're the expert, you'll advise. Just looking at even the penetration of pension space or the pension industry in Kenya, do you think post-retirement medical cover will be embraced, Laura? Would it be because of the medical needs? Remember, we have this common concept of black tax in Kenya, where someone is unwell, WhatsApp groups are formed. Do you think in that informal sector, what we're calling Juakali sector, do you think they can embrace this saving for purposes of taking care of medical needs in the future? Yeah.
Yes, I think it's a possibility. And I think what we also need to maybe understand is that the education that is needed for people to understand what this particular solution is coming in for needs to be done. I can assure you a lot of people maybe don't even know that it's available or how it works, because it's not constantly being
mentioned,
about.
Right.
And you need to mention it consistently, because the issue of black tax is affecting everyone.
Yeah.
And if someone finds a way to elevate themselves from having to deal with the black tax, and there's a solution to ensure that if I can change this, the next generation doesn't have to deal with this.
Yeah.
The next one doesn't have to deal with this. Then that will be taken up. But
It's an empowerment issue.
It's an empowerment issue.
Is it a problem in this country? Because then, and what age groups are we looking at? Because it's typically become, even when we are in the pension space, all of us, we've been there, doing member educations. Every other time that you're doing pre-retirement planning, members come and tell you, where were you to tell me about this? How can we approach this differently? Linus, I would come to you to be able to communicate this very important matter of post-retirement medical, because we all know that Medicare is very expensive, right? I'm assuming, just look at this way, Linus. If we're saying that I can save up to 1,000 bob, I'll have 12 at the end of the year, and you compound it. Is it possible for me to project what I'll have? And from that projection, know if I can afford a medical cover, right? Is it?
Yeah, so it is possible, and there are a lot of tools actually in the market which can enable somebody project from a given level of saving what they'll be able to get at retirement or at a particular age, whether it's age 60, 65 or so on. And with those tools in place and that projection model also, then people can be able now to plan better in terms of having a definite plan of what you would like or how you'd like your retirement to look like.
Yeah.
From a benefit point of view, that these are the things that I want to save for, and this is the amount of money that I want
I'd like to have.
that I would like to have at retirement, because you feel maybe that amount is what would be sufficient to cater for whatever needs there are. So just touching on what also Laura said, in terms of just even this whole approach of post-retirement medical, what I feel is that in terms of that whole conversation, it has to be a holistic conversation, which touches both on the retirement benefits, which are the pension benefits that the individual is getting, and then incorporate that within the post-retirement medical field as well. Yeah.
How can people participate in post-retirement medical funds? If I want to join a post-retirement medical fund, how do I participate in it? And Laura, I'll come to you. or rather, let me start with Linus on how I can participate in a post-retirement medical fund, both in the space of being employed and that of Jua Kali.
Okay. So if you're employed and your employer has set up a retirement scheme, the regulations in Kenya require that all retirement schemes have a post-retirement medical section.
Okay.
So what that means is that you, as a member of that scheme, can start making contributions, additional contributions over and above what you're already contributing for that purpose. So what you need to do is to, whether it's approach your administrator, whether it's approach the HR, but they will have forms that will enable you to join.
Okay.
And then from that joining form, you can then submit how much you want to contribute and so on. And then the process will kick off through check off deductions from payroll.
From payroll.
So that is how somebody who's employed and belongs
Yes.
to a pension scheme.
Yes.
Now, two, you could also still be employed in the formal sector, but there is no pension scheme. In that case, you would approach a provider who provides individual pension plans, and there are quite a number out there. And again, there you would go through the process of filling the form, declaring how much you want to contribute, whether it's to your retirement fund, whether it's to your post-retirement medical fund, and then the process will kick off from there.
From there.
So
Okay.
in a similar way, the same can be done for somebody in the informal sector.
Okay.
Now, the informal sector, or some differences between the informal and formal sector would be that maybe these are individuals who are not on regular pay, but that I mean maybe there's no pay slip, there's no pay deduction.
Yes.
But you can still get into an arrangement with a provider who's providing these individual pension plans, which tend to be more flexible. They don't necessarily expect amount every month.
Okay.
But you can make those arrangements, get into the way you'll be paying your amounts across, your savings across, and be able to go through that process of starting to save towards your retirement or your post-retirement medical costs. Yeah.
Excellent. Laura, the conversation about, my view is post-retirement medical funds and saving for medical needs in the future is a way of de-risking or trying to mitigate risks. The conversation typically around millennials about saving risks, to a greater extent, seems like it's getting there. Your view on the Gen Zs, it's a hot thing in town. Do you think they will welcome this? Because we're talking about risk mitigation here. And in my view, again, I think post-retirement medical funds and financial literacy go hand in hand. Do you think this is something they can embrace? Two, how do we cascade this information to them? Being that they're a totally different entity and generation in terms of even consumption of information.
Okay.
Yeah.
So typically, and correct me if I'm wrong, Gen Zs are between 12 to 27.
Yes.
So when you look at that age group, there's a portion of it that might understand what that means. That's probably, let's look at 21 and above. Between 12 and 20,
They're there.
they're out of touch.
Yeah.
You remember yourself between that age?
Nothing.
A few things are not
I'm telling
making
you.
sense. So my view is for that particular age group, maybe make an introduction to what this is. Again, on that conversation of educating. They might not have, they might not be in a place where they fully understand it. A 12-year-old might not even comprehend
Exactly.
what is happening
What is
around
this?
them.
Yeah.
And you'd find maybe at 20, 21, they're in campus. So you're not really in touch with what is happening at home as
The
much,
realities,
or the
yeah.
realities of life. But introduce this topic into them. And I think using the tools that they are most interested in, make TikToks about these things.
Right.
Just do an education of what does this mean.
Yeah.
Then slowly by slowly, they'll be able to embrace this subject that you're trying to push on and ensure they're also moving with us with the conversation.
It's interesting, actually. I think, and in my view, is it about time that we actually entrench proper financial literacy in our education system in Kenya and cover all these things? Because at the end of the day, these things will affect us in one way or another.
Oh, yes.
We will go through the vicissitudes of life and get to that point where we are old. Even if you're 12 now, if you are blessed enough, you'll get to that age of retirement and you would need some of these things. So the earlier you start some of these things, the better. It's about time, in my view, to entrench some of these things in our education system.
Yeah.
But then, Linus, I have saved 5 million all the way up to retirement, then what? This is PRMF. What next? How do I access this benefit?
Okay. So you saved diligently in your working lifetime. Now you've reached retirement and now you want to access the benefit. So what happens in a post-retirement medical fund is this, that number one, your trustees or the people who you've entrusted to be keeping your monies and investing them will be able to provide you with a panel of providers. Now, those panel of providers typically will be insurance companies, which will provide you with various medical covers. So they'll tell you for inpatient of this amount, for outpatient of this amount, this is sort of premium that you'll pay.
Yes.
So depending on what you've saved, if you've saved 5 million, if you've saved 10 million, you can look at that area and decide which one suits you best.
All right.
Of course, the more you've saved, the more benefit you're able to enjoy as well. So looking at that now, given the array of possible benefits, as a member, you'll make a choice on what is the benefit that best suits me.
Okay.
Apart from that, you'll also make a choice of who do I want to be covered in terms of do I have a spouse? Do I have dependents? So there'll be a lot
Does
of
it allow
flexibility.
people from our region with 2-3 spouses?
It's actually up to the member. A lot of schemes are actually flexible, unless you're in a scheme which is there are certain schemes which are specific, which will say that this will only cover the following members.
All right.
But there are some which are flexible.
All right.
And now where there's flexibility, then you can be able to choose 2, 3, 4 wives or however many it is, and you can put them under that cover.
Under the cover.
Yes. So really that's the way the member will be able to access the benefit.
Okay.
And from that day onwards, the premiums now will be coming out of the saving, that the member
which
has
the
made.
fund then now will be paying
Correct.
every year.
Yes.
Will I run out of my 5 million? Okay, let's say I've saved 2 million, Linus.
Yes.
And God is gracious to give me quite a number of years. Will I run out of what I've saved and at some point I'm not able to meet my premium needs?
So one of the risks that, and again, this goes back to member education and information that members need to be provided with. If you've saved a certain amount, and we're using 2 million as an example, and your cover, is costing you 400,000 per annum because you're covering yourself, maybe your spouse plus a few other dependents, you may find within a period of about 5 or so years that money could run out. So yes, it's a possibility that the money can run out.
Okay.
So as a member and as part of that member education, the member will have to be taken through what their money can reasonably purchase.
Okay.
Such that if you want to get a cover and you have 2 million shillings, maybe you need to look for a cover whereby the premium is about 100,000 per annum.
Okay.
But if you choose a cover that's 400,000, then you could run into certain risks.
Yeah.
So that is the sort of education that will go along for members to appreciate what does this sort of level of saving enable me to purchase.
And for how long?
And for how long.
Longevity risk would come in and
so
stuff
again,
like
that gets into financial planning so that then members are able to plan well. And also even at the saving stage, as you're saving, you should also be advised that with this 2 million, because you're aiming to save 2 million, this is the sort of cover you're
likely to get.
You're likely to get. You're not likely to get a premium cover, say, for instance.
And again, I'm coming to you, Laura, shortly on your closing thoughts because you're running out of time. In your view, again, Linus, will a medical annuity sort that out?
Okay.
Will a medical annuity sort out the possibility of running out of, cash?
Okay. So the concept of medical annuities and the way it works in Kenya is this, that you have your amount of money, and I'm using 2 million as an example, and that amount will be converted into an annual amount that will be paid to you to actually pay your premium. Yeah. So you may find in that sort of situation that this annuity may convert to, say, 200,000 or whatever amount that will be provided by the
insurer,
annuity provider or the insurer. Now, the challenge that happens is this, that you'll actually end up having 2 products. One is the annuity, which is that regular premium.
The pension?
And then 2, you'll have to pay the medical insurance premiums. And the 2 may not be linked. What do I mean by that? The medical insurance premiums may increase because of inflation.
All right.
So you may start off with a medical insurance premium of 200,000, but next year it's 220 and so on.
Yeah.
And on the other side, your annuity is just giving
The
you
constant.
200,000.
Okay.
So you may need to chip it, or you may need to top it up.
Yes.
And so that could be the disconnect. And again, like I'm saying, again, as long as the member is educated and knows that's what they're getting
The
themselves
implication,
into,
yeah.
then it is fine. Such
Right.
that you know you have a guaranteed 200,000 coming through every year for the rest of your life, and the balance you'll chip in as
top
and
it up.
when it is
Well,
required to top
I
it up.
honestly think we still need quite a bit to talk about this topic. We need a lot of sensitization to the population in Kenya generally, because I think medical is a need. And you must have seen the unfortunate reports in the media about people not getting dialysis with the change of NHIF to SHIF and so on and so forth. And they cannot afford to pay that amount in cash. Maybe a properly set up medical system would be able to alleviate that. Laura, your closing thoughts on the need of PRMF and one or two nuggets or one or two things you feel that as an industry, insurance, financial services, non-banking, we can do to enhance the conversations towards this very important topic. Yeah.
Okay, so for the need, I think without belaboring the point, we all understand that medical needs will come, especially the older we get, it becomes dire. It's a matter of life and death, literally. So it's a conversation that we cannot ignore. And one way or another, solution must come out.
Yeah.
And having a post-retirement medical fund is a step towards that. It's a step that we are moving toward the right direction,
Okay.
and you're trying to ensure that this is taken care of.
Yeah.
What we can do as the sector, I think more education. More education must be done, and consistently. And you
Yeah.
must not tire.
Indeed.
Yeah, you must not tire that you've said it again and again and again. One more time after the 10th time won't hurt. Yeah, we need to do
Over
it again.
and
over
over
and over
and
again.
over.
And if it's the possibility for some of these critical issues to be part of a syllabus, why not?
Yes.
Yeah?
Yeah,
It's a critical issue that might even change the future generation and how we are going to move as a country
Yeah,
moving forward. So
yeah.
why not? Yeah.
Thank you. Linus, two things. Closing thoughts will come later, but where do you see PRMF's, the conversations around post-retirement medical in the next, let's say, 5 years?
Okay. What I've seen is that the momentum in terms of conversation is increasing. We have a number of post-retirement medical funds that have been set up, both in the public sector and also in the private sector. I think a lot of the other schemes or a lot of the other individuals are watching what is happening. And I think because of that wait and see, I think now a lot of them are now ready, more or less, to dive in. So what I see is that the savings on that front are going to increase.
Okay.
Going forward, there'll be more appreciation of what the saving towards post-retirement medical can do for individuals. And in the next 5 or so years, I see a lot of individuals now starting to retire, starting to build bigger funds, and then be able now to enjoy.
Yeah.
Also, on the other hand, the service providers, and I'm talking about, let's say, the insurers and all,
Yes.
I can also see a lot of products being developed.
Okay,
I think
okay.
I've seen Jubilee have developed
Right,
a number of post-retirement medical products, and I can see the other industry players also coming in, and there'll be more innovation going forward in terms of what will be provided to.
Well,
to
I
the
think it's
members.
about time. Congrats, Jubilee. I think it's about time that is done. We need to get that out of there. The industry need to embrace this. I think we've taken quite a bit of time to accept this thing.
Yeah.
And it's a reality that we cannot run away from. Thank you very much. Again, we are running out of time. Viewers, thank you so much for listening to us, viewing us this particular day. Thank you very much. Until next time from Zamara. Thank you.